Eric Muadid, Muadid.com, for the weekend of October 3rd and October 4th, 2015. Let's take a look at how world markets closed. We see that on Friday, biggest mover was Hong Kong, which was up about 3%. The other markets were slightly unchanged, with China up about 0.5%. Japan was unchanged, and we see that the KOSPI was down slightly. So a little bit of a mixed bag. Australia was down about 1%, but the biggest mover was Hong Kong, up 3%. If we take a look at how European markets closed, we can say nicely up for the day on Friday. A nice gain on the major averages. And if we take a look at the Americas, and we can see here that as of right now, Brazil is having a nice session, up about more than 2%, and with about 2 hours to go. If we take a look at the US market with about 2 hours to go, right now we are looking at the Dow up about 62 points. Earlier it was down I think 250 points. You see markets are slightly positive in the US. We'll see how we close at the conclusion of Friday. We see that gold and crude oil are also up. Gold is up 2% and crude oil is up 1.3%. Let's begin by taking a look at the Canadian market, and we see here that on the long-term monthly chart going back about 13 years, if we draw a line right there connecting the lows over the last couple of years, the major lows, you can see the lows here of 98 hit that level and bounced. You can see also here we finally moved above this line here, which also happens to be around the same area for the nice lows of 2002 and 2003. And then finally we went below the line and back above it with uniform action. And so when we recaptured that level there, that was a re-entry. We came here recently, I guess 2011, hit that lows there. We touched the same line here for those lows. And obviously what I'm getting at here, depending on how the monthly charts develop, remember we've only had 2 trading sessions for this month. Depending on how things play out here, if this can be support and the market can build above that line of support, it is not out of the question that this market could actually move higher. If we take a look at the daily, the one thing that the Canadian market needs to do, just like other markets, is move above this top line on the daily RSI. Because it's still trading below this line, there's a lot of work that needs to be done to repair that. Anything above that would be bullish, but right now it's trading below that, so we have to assume short term there's a lot of work that the market needs to do to repair that. Take a look at the hourly for the Canadian market. Take a look at the recent break line here. That break happens to be around the 50 on the hourly, which corresponds with this high coming off the highs here. And you can see that if we draw a line around the 50, that's where it's been struggling to hold above that. It did see resistance here and a pullback after that, and over the last 2-3 days we've been coming here and making contact. So lots of things the market needs to do short term to clear resistance. Otherwise, for right now the monthlies show some signs of support, but we need the dailies and the monthlies to confirm that by breaking out of the short term support areas, which they haven't done so as of right now. Take a look at the Brazilian market on a long-term monthly chart, and there's a line here that I'm going to draw in green right there. And you can see that over the last 15 years or so, this is where it's been finding nice support before it moves higher, or at least short-term support. Even here off the lows of 2008, 2009, it hit that level and recaptured back above the green line for this entry here. And ever since then it's been using this for short-term month-to-month move higher. So we can see that this is a logical area in the Brazilian market where it could stabilize, because it's coming back to a level where it has been showing support, at least short-term support, over the last 15 years. So somewhere around here it can start building on that after the recent pullback. If you take a look at the Brazilian ETF, the EWZ, we can see that right now there's a fight going on. If it can recapture the level back above 30.9, that could be the beginning of a recovery. So it needs to be above that if it's to move higher. So anything that keeps it below 30.9 would be bearish. Right now it's doing its best to recover and it's trading at 30.74. If it stays above that, this is a sign that there's a potential recovery, at least an attempt to stabilize this massive plunge. Otherwise, if it stays below 30.90, one can expect even lower prices. Let's take a look at some European markets. Begin by taking a look at the French market, and we can see recently on a daily closing basis we made a lower low, and while we were making a lower low on the daily, we made an improvement on the RSI. I think that's good enough for a short-term move higher because of that positive divergence. A quick look at the French weekly chart. We can see that the French CAC here might be holding support on the weekly chart based on the lows going back about 2-3 years. That seems to be, let's call it nice support for now. We also see that on the RSI, this line seems to be holding. And if this line is holding, keep in mind this line has been holding and being stability, an area of stability for the market going back a couple of years. So if this can also hold around there, then one can expect the market to have at least a short-term bounce. And so we can also see that on the, if you take a look at the FTSE, if you draw a line connecting recent weekly RSI lows, as of right now, this seems to be holding. Surprise, surprise. This seems to be holding. And as long as that's the case, maybe there's a chance here to recover some of this recent loss. And also we see that there's a line here, this green line, where it's been bouncing over the last couple of years. Ever since it moved above this level here, it has been using that green line for a nice area or buy signal. So if it can recapture that green line and hold on the blue line, even the London market, the FTSE, is showing signs of stability. If you take a look at a closer view for the FTSE, you can see that it held the recent weekly closing low. It spent some time early in the week below that, but by the end of the week it had recovered. That's a good sign. As long as markets are showing support where they need to, this is how you can start building on a broken chart. Does it mean that the market has to come and make new highs? No. It means for now there's some chance, or at least improving odds, that the market could actually stabilize, if not even have some type of a bounce. If you take a look at the long-term monthly chart for the FTSE, you can see somewhere around here, which surprisingly or not happens to be around 38.2 on the monthly RSI, is where it's been beginning most recent multi-year moves. You can see the support here and a move above that green line, and above 38.2 on the monthly was the reason why it moved higher off the lows of 2000, 2001, 2002. We also moved back above that line here, which is this period here in 2009, and also we came close twice and held during this period here. So right now, if and it's a big if, because we don't know, we've only had 2 trading sessions in the month of October. If the market can stay positive, then this is not a bad sign for those who want the market to go higher, because it is finding support in an area where it has been doing very well after confirming support on this line. So anything showing support is good. Otherwise, if it breaks below that line by the end of the month, or whenever it breaks below that line, if it does, that would be a bearish sign. For now, the information in front of us is that we are up 1% for the month as of close of Friday. So anything holding above that line is a sign that the market might be looking to move higher. If we take a look at the German market, the DAX, we can see recently we made lower daily closing lows. While we were doing that, we had an improvement on the RSI, which is good. Short term, that can be good enough for stability. We also see that if you take a look at the lows coming off the lows of October 2014, the market did move above this RSI level there. You can draw a line from there, something like that, and you can see that this has been short-term support on the market on multiple occasions. The market has been bouncing at least short-term after hitting that line. And recently we see that we went below the line and back above it with uniform activity, and again recently we did the same thing here. So really, in terms of the daily chart, might explain why there was a little bit of a move high on Friday because of this improving technicals. So for now, a little bit of an indication, maybe higher prices. How much higher? Tough to tell, but keep in mind there's a lot of resistance here. Number one, there's resistance on the top side that needs to be cleared. The market has not cleared that resistance, and we are also trading below a downward sloping 50-day moving average. So lots of negatives in terms of the kind of resistance in the coming days and weeks. The market needs to clear the 50-day moving average, and it needs to clear this declining line of RSI resistance. China seems to be still trading in this wedge type formation over the last couple of weeks. So until it can move above that or below that, tough to tell which way it wants to resolve. If you take a look at the monthly, you can see that on the monthly, ever since we moved above the 50 level here, the market went on a nice, let's call it great run, and now it needs to hold above 50. If it can hold above 50 and turn positive for the month, that would indicate short-term prices are more likely to go higher. Otherwise, if it breaks below and trades below 50, then we can look for even a much deeper correction. For now, it's playing around with the 50, and so if it can hold, that's good. If not, then it goes lower. Let's take a look at the KOSPI, and just like we saw in the Brazilian monthly chart, we can see that it's been using this line here on the monthly for short-term lows over the last, let's call it 3-4 years. Every time it hits that line, it has a multi-month move higher. So we are seeing at the beginning of this month signs that it is holding on that green line, and maybe even this market looks poised to at least recover some of the recent losses. Let's take a look at Japan, and we can see that the Nikkei did have another drop lower over the last week or so. We made lower lows, and while prices were making lower lows, we can see that the RSI was improving over time, and so this is good positive divergence, which might give it a little bit of a room to move higher and maybe stabilize. That's one view. The other view is based on this entry here off the lows of, again, October of last year. If we draw a line there, we can see that it is now back above that area, and this has been pretty nice area for bulls to get back in the market. Every time it finds support here, you get a little bit of a move higher after support. Now we are trading back above that line, gives it a chance to move higher. And like other markets, we see that a lot of resistance. It needs to clear this in the coming weeks and months. Once it clears this line of resistance on the daily RSI, then maybe that's when it might have a good chance to recover. Anything trading below this is still suspect in my opinion. If we take a look at the monthly chart for the Nikkei, you can see here that if it can hold and bounce off the 50 level, that's going to be good enough to stem the recent slide. So holding above the 50 and building higher on the price and on the RSI is pretty much a sign of a market that wants to recover. So right now, very early on in the month, it looks like it's trying to do that. So that's one way you can look at this. The other way is to take a look at the RSI on a monthly chart, connect the lows going back to 08, and you can see that it connects nicely with where it's trying to bounce for now. So if it can continue holding on this line here, one can expect higher prices in the coming weeks and in the coming months. Otherwise, and it's always good to emphasize this, otherwise, if by the end of the month or in the next month, if we break that line which is now being offered as support, if we break that line, that would indicate that there's even more downside. But since we haven't seen that, we have to assume right now it looks okay on the monthly chart. It's very early on in the month to start making very strong conclusions, but if you take a look at the Nifty for now and take the lows of 08 and the lows of 2011, lows of 2013, extend that line, you can see as of right now we are seemingly holding and finding support on that line. As long as that's the case, the indication is that in the coming weeks and in the coming months, there is a chance that this might actually continue to move higher unless we break below that line. So right now it looks like we are holding. Anything positive for the month would show that the line is holding. So that's one very strong argument there for a nice support or break. And we also see that if we take a look at this breakout in the beginning of 2014, this breakout here was very successful in pushing the market to new highs. All we have to do is extend that same line, and by extending it we can see that as long as this is support on the back test, that would indicate higher prices. Otherwise, for the market to drop, it needs to break that line. Right now it hasn't broken that line. We have to assume that the bulls are still in control of the market, and as long as the line is holding, we should expect the market to move higher. If we take a look at a 5-year weekly, we can see that off the lows here in the beginning part of 2012, we can see that the market did or had moved above this RSI level, and so we can use that, the uniformity action. Every time the market bounces on this line, we know it's a buy, which was correct there. Nice support here during this period for short-term swing trade higher, nice support here for these lows, and recently here for short-term swing trade higher, and now we are holding above that line. So as long as that's the case, it looks like more and more many of these charts are showing that they could already be on the way to recovering if they can hold the prescribed RSI levels. If you take a look at the daily, the one area where we can still see that there's a problem here is the line connecting the highs on the daily RSI. The market hasn't moved above that line, so still there's a lot of work that needs to be done to really be in a recovery mode. Also recently we've been failing at the 50 level, and I'll show that here. So this level has been where the market has been stalling. As of Friday, we are still trading around that 50 level. For the market to truly build, it needs to clear that level and trade above it. Otherwise, resistance around the 50 and back below it would be bearish. So lots of work that needs to be done. Market needs to start trading above the 50 if it's to do well. It's been struggling over the last 2-3 months. Every time it comes to the 50, it's been rejected and pushed lower. So we'll see what happens in the coming days. It needs to be above that if it's to be truly a nice move that is impending. Otherwise, if it stalls, expect it to continue pulling back, maybe to even test recent lows somewhere here. If we take a look at the hourly, coming off the highs there, we broke this RSI trend somewhere there, and we'll draw a red line from there. Every time we move back below this red line, the market has been stalling. We moved back below the red line, which is here. Again, we did see resistance here for the highs there, and we moved back below the red line for these highs. As of Friday, we are still contending with that resistance. So anything clearly below and showing resistance here might indicate lower prices. If the market wants to move higher, it needs to clear that resistance that has been a problem. So the market does need to be trading above the red line if it is to trade in a different kind of a behavior. For now, we are still showing resistance. One suspects that maybe we begin the week with a pullback and calls into question whether the weekly charts and the monthly charts are going to be still looking like they're showing support. And again, let's go back to that monthly chart. This monthly chart is the key in my opinion. Over the next couple of weeks and months, whether this line can hold will determine where the market goes. Holding on this line is good for bulls. Otherwise, a break of that line will be disastrous and markets are going to plunge even deeper. If we take a quick look at the Australian market, just like the other markets we've seen, we can see that coming off the lows here in 2011, this entry here was a good entry. Market hasn't been back to those levels since. We can draw a line from here, and clearly we see where the market has been finding support going back many years. Even recently here, we touched that line there and held. So right now we are back here, And so long as the market is showing support, we have to assume that support is for a good reason. So looks like this is where the market could start building. If it can build on this support on the green line, that's good. Otherwise, if we observe down the road that it's breaking that line, which has been very successful since 2011, then we can stand a little bit bearish again. For now, it looks like to me like decent support, good enough to even move the market higher. If we take a look at the Australian market from a long-term monthly view, going back to 1990, draw a line here, just about above 38.2. So just roughly above 38.2 on the monthly going back to 1990. We see that it has been using this line here for multi-year rallies and making lows. We touched the lows here of 2002, 2003 and moved back above the line for those lows. We have uniform action below that line and back above it. So once it recaptures that line, that was an entry somewhere there. And the lows of 2011 during this was held on the line. And now if we can continue building on this, around this line here, this is actually some sign that the market could want to move higher. Otherwise, let me qualify something here. If for the first time since 1990, if we go and break that line, any break of that line would suggest a very deep correction. For now, it seems like we've only had two trading sessions and the market is kind of building on that. We haven't really, I think the Australian market was down on Friday, so it remains to be seen whether it's going to hold on this line or not. This line has been very successful over the last 25 years. Anything showing support would suggest an improvement in prices after recent move off the highs. Otherwise, if it breaks, that's not gonna be good. Let's take a look at the South African market, and we can see as of right now, without knowing what the future chart is gonna look like, we can see at the end of the week here, we are seemingly holding and bouncing off the 50 level, which is very good indication of what the market wants to do. And if we go back a couple of years, let's go back to see what the monthly chart looks like. It's about 10 years of monthly data here, and I'll draw a line just above the 50 right there. And you can see that the market has been bouncing off that line since 09. Bouncing off that line here, the double bottom on the green line for these lows, and right now we are doing the same. So as long as it is holding on that line, on the green line, that's good. In the future, should we break below that, that's when we should start turning bearish again. For now, it looks like the markets are changing the way they have been trading. Now, it's very, very early on in the month, so let's not make very strong conclusions, but at this rate, if the market can build on the monthly charts, it might be good enough to stop the market's recent slide. I would like to conclude here with the S&P 500 monthly. And we can see that on the SPX, since the lows of 09, the market has been bouncing nicely on the 50. It held the 50 back above the 50 there for the lows of 2011. And right now we are positive for the month, albeit slightly. But if this can be confirmed as support in the coming weeks, you should expect the markets to take out these highs. I know that's a fantastic prediction, but I'm saying if the market can hold support here on the monthly, I would suspect that it's going to have to take out these highs. And so that's the, and why do I say that? You can see that once it found support here around the 50 here, it took out the highs. It found support here around the 50, which was here, and it took out the highs. So if this can be support, then it's going to potentially take out the highs that we made recently. I know even I personally find that to be such an amazing thing to happen, but you know, you have to be very open for all types of possibilities in a market. So it depends on what happens. Now the key is if we break, and if we are still down for the month, and if we are trading below 50, anything below 50 is going to be bearish. But if the market can sustain and trade above 50, any move above 50 here is going to be good. So we're still going to have to wait and see what happens. Be careful out there. Yes, the market was bearish the last 2-3 months, but now even I am surprised that it could actually find support, as amazing as that sounds. If support fails, then we continue to go back to our previous thesis that the market is broken and should see lower prices. So be careful, because the bulls could actually save this situation. Eric Muad with Muad.com. Enjoy your weekend. Good luck, peace, and blessings. ERCS. Woo! See you guys. I am out.